Right, good morning everyone as we head into European trade on Tuesday the 30th of January. We'll have a flick across markets and we'll see what is going on as we approach the penultimate day of trading in the first month of the year. Probably the major bit of news, well, markets related. I mean, you've also got former Pakistan Prime Minister Imran Khan getting a 10-year jail term for leaking state secrets. As the former cricketer turned politician has been in prison since was it August? I think it was August 2023. So he's obviously been locked up for a while, and just 10-year jail term for leaking state secrets. Is it market related? No, but it's a bit of interesting news. To start the day, Chinese property sector worries dent Asian shares. There's a court-ordered liquidation of China's Evergrande, which is the second largest real estate company in China. You know, if there's a court-ordered liquidation, the court is ordering liquidation of the second largest property company in China. Obviously, a lot of people hold mortgages and stuff with that company. They do a lot of business throughout China in terms of the property sector, which is an extremely large sector across China. A lot of China's net worth is tied up in properties, which is obviously not a good thing if they are ordering the second largest to liquidate. So that has sent Chinese stocks lower overnight. But again, it's just another thing to put a nail in the coffin of Chinese stocks, which struggle to gain any upside. There was bets last week that the Chinese would introduce $280 billion worth of stimulus to prop up financial markets and pump into capital markets. So it is maybe something we keep an eye on in terms of that. But the property sector in China pushing lower drags Chinese stock indexes lower with it. Apart from that, dollar locked in tight ranges ahead of Fed decision, jobs data. You've obviously got an important week ahead for the dollar. You got the Fed tomorrow evening. You got the NFP unemployment rate, all that sort of stuff. Then on Friday, which we will get to a little bit later on in the week, we've got the Fed to worry about first. This is a stupid article talking about oil. I mean, oil inches up on Middle East concerns. Oil prices gained on Tuesday following a more than 1% drop the previous session, as escalating geopolitical tensions in a major producing region in the Middle East fueled supply concerns. I mean, it's just something to suit the narrative. And oil prices gained on Tuesday following more than 1% drop. Okay, well then why didn't they gain yesterday? So I would just read that as the markets don't really seem to care about that most recent addition to the tensions over that side of the world. But apart from that, there's not much fresh fundamental news flow. There's a bit going on with the economic calendar today, which we'll get around to. But US stocks slightly lower. We're up pretty aggressively yesterday, which we'll have a look at. European stocks up slightly higher. Let's see how they open up in about 10 minutes time, due to get going a little bit later on. You can see the Hang Seng, the kind of larger Chinese index, down nearly a couple of percent off the two of them. So as I said earlier, Chinese stocks down due to a forced liquidation of Evergrande. Bond yields lower across the board, slightly lower. Again, that's not really producing much market moves anywhere that you look. The US dollar mixed, the Aussie mixed, Kiwi dollar, do have Australian dollar inflation, which we'll have a look at. Kiwi dollar up across the board, and not really driven by anything though, is it? I mean, all these currencies kind of moving for not much of a reason. I mean, yields lower, Japanese yen higher, which does explain upside in the Japanese yen yesterday, does explain upside in the Japanese yen today. Now, I was surprised why sterling's down across the board, but I mean, that's what it is. It is down across the board. There's no real clear catalyst for it, or reason for it. I still do think you'll probably see sterling higher post BOE on Thursday, but it's obviously on Thursday and not today on Tuesday. France have seemingly avoided a recession in Q4. These are only the preliminary figures, so they're not the final figures, but they have avoided a contraction, which does lend a bit of hope towards the rest of the Eurozone economy, although that is in line with consensus. So I think once we get 8 o'clock, once we get Spanish GDP out, then it comes into German GDP, then it comes into Italian GDP. Spanish is expected to be above zero, so they're expected to avoid a recession, but not the largest economy throughout the Eurozone. The largest economy is Germany, and that's expected to contract by 0.3% over Q4 of last year. GDP in Italy expected at 0%. Do we get a miss? Do we get a beat on Italian growth, should I say? That will then lead us into European growth. Now, if they do go and enter a technical recession, which 2 consecutive quarters of negative growth is, or contraction, should I say, that would be that contracted in Q3 of last year. Do they contract in Q4? Wouldn't be the complete terms of a technical recession, as it is a flash estimate. It's not the final figure, but pretty much gives us the answer at 10 o'clock today. So let's see how that is if they do enter a technical recession. I mean, it's only a shallow one, minus 0.1%, but I mean, it certainly isn't a positive for the price of the euro, is it? It just brings the prospect of rate cuts further, which, an economy in a recession, rate cuts, both are negative for a currency. Do have some job openings a little bit later on. We'll speak about that a little bit later on. And we do have inflation in the morning out of Australia, which is still too high, still coming down. Central bank not likely to adjust monetary policy any further off the back of that. But raft of GDP figures out today, probably not likely to be that positive for the price of the euro. The price of the euro continues to trend lower. A bit of a rally into the close yesterday, or into the kind of reset of prices yesterday, should I say, and then that is sold back into. So I can't imagine much support for the euro in the coming sessions ahead. So keep an eye on that. Your Aussie, Kiwi, a bit all over the place, although trying to push higher. Sterling's a bit all over the place. So's dollar Swiss. Dollar CAD's trending lower. Dollar yen, bit all over the place as well. So just currencies, not the easiest of trade so far this week. Stock indexes, solid upside yesterday, 8 o'clock. Big upside across the S&P, the Dow Jones, the Nasdaq, the Russell, all pushing higher. That then drags the DAX, the Euro stocks, and the FTSE all with it. Not really driven by much. I mean, yields continue their move lower, as you can see, on a pretty aggressive move over the course of Monday and Tuesday. Lower in yields as the 10-year and the 2-year both pushing lower, which again provides a further bit of respite for stocks. Oil's got a bit of a head and shoulders on it. I mean, you would expect after the news over the weekend with further missile strikes in the Red Sea, oil being lost, that oil would push higher, but it is not. It is posting a bit of a head and shoulders now at the moment. So, again, that is a technical move, but if that breaks, we will certainly keep an eye on it. Gold, positive. Gold always likes when yields push lower, and they look to be continuing to push lower in early trade today. So I think longs on gold would probably be worth keeping an eye on if they continue lower. But oil through that head and shoulders, I think, is a bit interesting. GDP figures, will give it a bit of time for them to come out and filter through over the course of this morning, but I think currency's a little bit tricky to trade at the moment. Stock index upside, which has been a theme over the month of January. Stock index upside, gold upside, maybe a bit of oil downside. I mean, if oil can't rally off, fresh tensions in the Middle East and the post head and shoulders, now maybe it is a reason to go and get short some oil. But yields lower, gold higher, stocks higher, maybe a bit of oil on the agenda for today. I think currencies, as I said, maybe one worth giving a bit of a miss. But keep an eye on the GDP data. How does that filter through over the course of this morning? Let's see what that comes out and says, and then we'll update further as we head towards the US session a little bit later on.